Picture this. It's a random Tuesday, you check your bank account, and you've got exactly $14 left to your name. Payday isn't until Friday, and you can already feel that familiar tight knot of dread in your stomach. But then, you go to grab a winter jacket you haven't worn in months, you reach into the pocket, and your fingers brush against crisp paper. You pull it out. It's a $100 bill. Instantly your heart rate spikes, right? We've all been there. Now, we often think that building true wealth requires this massive inheritance, or a huge six-figure salary straight out of school, or just getting super lucky on some random tech stock. But today, we're diving into an explainer that proves the exact opposite. We're going to look at a story centered entirely around one tiny, seemingly insignificant micro-decision that ultimately spirals into a completely transformed life. So let's step into the shoes of our main character for a second. We'll call him Leo. Now, Leo is working incredibly hard. He's putting in 50-hour weeks, but he's just totally caught in that exhausting, endless cycle of living paycheck to paycheck. His apartment is cluttered with past due notices, rent is eating up way more than half his income, and, groceries just seem to get exponentially more expensive every single time he walks into the store. The sheer physical and emotional weight of this is crushing him. He's literally operating in survival mode 24/7. Then, completely out of left field, he gets a break. Maybe it's a birthday card from an aunt, a forgotten rebate, or just a tiny cash bonus. Suddenly, he's holding $100 that was not in his impossibly tight budget. Now, for someone in Leo's position, this unexpected money isn't just cash. It's a psychological pressure release valve. When you are constantly depriving yourself just to keep the lights on, a sudden windfall feels like a golden ticket to just escape reality, even if it's only for a couple of hours. It's basic human nature. He instantly pictures ordering this massive, expensive takeout meal so he doesn't have to eat cheap ramen again. He thinks about grabbing those concert tickets his friends won't stop talking about. The temptation to just let go, buy something fun, and numb the sheer exhaustion of being broke is absolutely overwhelming. But here is where the trap is set. The true danger of this scenario lies in the specific amount itself, exactly at $100. See, this isn't lottery money. It's not enough to even make a dent in his student loans. It definitely won't cover rent, and it's for sure not buying a new car. And because it doesn't feel like life-changing money, our brains easily categorize it as completely disposable. It's that exact tricky amount we convince ourselves we can waste without feeling guilty because, hey, it's not going to fix the big problems anyway, right? But actually, scratch that logic. That is a total psychological trick. Because that choice, as small and disposable as it seems right now, is the literal fulcrum on which his entire financial trajectory balances. So now, there's this fierce internal tug-of-war going on in Leo's head. Present-day Leo is screaming to spend it right now. He wants that instant dopamine hit. Go out for an amazing dinner, buy those sneakers, just blow it on a fun weekend, and forget about money problems for 48 hours. And the relief would be fast and sweet, no doubt. But then there's this quieter voice, future Leo. And future Leo requires emotional restraint. Choosing to use this money wisely means having the guts to tell yourself no today, right in the middle of extreme stress, so you can say yes to financial peace tomorrow. And let me tell you, delayed gratification is brutally difficult when you're financially exhausted. It means sacrificing the guaranteed comfort of today for the theoretical security of a future you can't even see yet. So what does this all mean? What if Leo tries something completely radical here? What if he fights off that urge to buy a fleeting moment of relief and just holds on to it? Look, if he spends it on a night out, that instant gratification is 100% gone by Monday morning. He wakes up tired, his bank account is exactly where it started, and the brutal cycle just keeps spinning. But if he chooses not to spend it, something really fascinating happens. He doesn't just save a piece of paper, he effectively opens the door to a completely different timeline. Let's actually look at how putting that money to work functions in the real world and how this tiny little seed can grow into a massive financial oak tree. Okay, so this brings us to compound growth, which is the true engine of wealth building. Simply put, it's the process where your money makes money, and then that new money starts making money too. It's like a snowball rolling down a hill. Imagine Leo takes that $100 and drops it into a broad market index fund. Inspired by actually taking that first step, he audits his life, adjusts his budget, and scrapes together just $20 to add to it every single month. That's literally just skipping one takeout meal every 30 days. Let's do the math here. Assuming an average annual return of 8%, in 10 years he's got over $3,700. But compound growth is a waiting game. In 30 years, that initial $100 plus that tiny $20 monthly habit snowballs into nearly $30,000. And what happens when Leo gets a raise and bumps that 20 up to 100 or 500? He isn't working any harder for that extra cash. His money is out there working relentlessly for him 24 hours a day. And here's the best part. By simply choosing not to blow that $100 bill, Leo naturally mastered the 5 foundational pillars of personal finance. First step, saving. He built the physical muscle of actually keeping money rather than instantly consuming it. Second, budgeting. To find that extra $20 a month, he had to take a hard look at his cash flow and plug his financial leaks. Third, investing. He learned the massive difference between spending on depreciating stuff, like expensive shoes, and put in capital into appreciating assets like the stock market. Fourth, delayed gratification. He literally reprogrammed his brain to realize that waiting brings a mathematically bigger reward. And finally, long-term thinking. He shifted his whole worldview from just trying to survive the agonizing week to actively building a prosperous life for the next 3 decades. Now hold on, before we get ahead of ourselves, it is incredibly important to point out that Leo's journey isn't some magical, perfectly smooth path to unimaginable riches. The stock market goes up, and yeah, it goes down. There will be years where his portfolio drops in value, which will absolutely test his resolve. Investing always involves real risk, and there are absolutely zero guaranteed profits or shortcuts to instant wealth here. The mechanics of the market are powerful, for sure, but they require patience and an iron stomach. It's historically one of the most reliable ways to build wealth, but only if you understand the risks and are totally committed to thinking in years and decades, not days and weeks. So, the big takeaway here? Leo's life wasn't transformed because some wealthy relative handed him $1 million inheritance. His entire life changed because one single $100 decision caused a massive shift in his mindset. It proved to him that he wasn't just a passenger in his financial life anymore. He was in the driver's seat. He had control. And, it is incredibly empowering to realize that your long-term financial reality isn't shaped by one giant lucky event. It's shaped by the small, everyday, seemingly insignificant choices you make on a random Tuesday. You don't have to be wealthy to start, but you absolutely have to start if you ever want to become wealthy. Ultimately, the choices you make today, no matter how small or insignificant they might seem to you right now, are the literal building blocks of your tomorrow. If you enjoyed this finance story and you want more simple money lessons like this, make sure to follow along for more of these explainers as we continue to break down the actual mechanics of wealth. But before you go today, I want you to take a hard look at your own life and ask yourself, what is your $100 decision today and which timeline are you choosing to step into?